And I got to say, today is a sad day for us, as we're getting close to the end of Nelson Nash's Becoming Your Own Banker book. And in fact, I think we're on page 82, where Nelson raises the question, what do I do if I'm uninsurable? Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And I got to say, today is a sad day for us, as we're getting close to the end of Nelson Nash's Becoming Your Own Banker book. And in fact, I think we're on page 82, where Nelson raises the question, what do I do if I'm uninsurable? So, Anthony, let's start there. Let's start with a definition of what uninsurable is.
Well, first, simply put, means that an insurance company does not want to offer you a life insurance policy.
And is that temporary, permanent, or both?
I don't recall of knowing an example of something that was permanent. But a lot of the times, things are temporary. Mm-hmm. You know, a lot of times people... I've had a client that had a form of leukemia not once but twice.
And they got a policy?
They got a policy. Obviously, it needs to be a long time after, or maybe not. Maybe it's 5 or 10 years, but we've had clients that have had colon cancer, breast cancer, various forms of cancer, heart attacks. But because the thing is, what they're looking at is what the mortality or your life expectancy is afterwards. And a lot of times now with the medical care, you might have an issue, you know, when you're in your 40s or 50s, but with the medical care, that can be solved. Mm-hmm. And one thing that I see all the time is people think they're uninsurable, and they're really not.
Yeah.
Like, for example, years ago, I was mentoring a younger guy. Not that much younger, okay, but he was younger, and we were talking about him getting some insurance. He's like, Anthony, I think I'm uninsurable. And I'm like, well, tell me why. Why do you think that? And he's like, you know what? I'm having these heart palpitations, like my blood pressure's going up. And I'm like, what's going on? Have you seen a doctor? And he's like, no, I haven't seen a doctor. I know exactly what it is. And I'm like, what is it? And he's like, you know what? I'm out of Paul Mitchell products. And look at my hair. My hair's a mess. And it's stressing me out. And I'm like, Cameron, it's going to be okay, man. Okay? Paul Mitchell will come back. It's on back order, and you will get everything all set. And, you know what it turns out? Like, you ended up getting approval, right? And I'm saying that as a joke, but oftentimes people, well, hey, I'm uninsurable because I have a high blood pressure or I have high cholesterol. All of that stuff has been okay. Right? As long as it's managed. If you have high cholesterol and you haven't seen a doctor in 5 years, they're going to have some concerns. But if you're going to a doctor and either there's medication or at least it's monitored, then it is going to be okay.
Yeah, great point on the being monitored is a lot of times, right, if somebody goes in and they have they're uninsurable at the moment, it's because they're asking them, or the insurance company will ask them to go finish out whatever required tests that were prescribed by their doctor. So rarely is it ever permanent.
Right. And even I would say sometimes I'm even surprised of what can be approved. And also I will say, and I'm sure you would agree, that people overemphasize their rating.
Absolutely.
Right. I want to be preferred, or if I'm standard, or, you know, and sometimes people say, like, I can't get an exam right now because you give me a week. I need to lose 5 or drop 10 pounds. But what they're looking at is going to be different. They're not looking at exactly a snapshot of where you're at now. They're really analyzing the whole picture. And again, remember, we're not designing these for death benefit. And I know it's life insurance, and everybody thinks about the death benefit and their health, right? But there's a lot of different ratings. Most people are standard, which is kind of where they get the name. And then there's people are better than standard. And each company has a different form, but it might be select, preferred plus. And then below standard is called table rating, maybe table 1, 2, 3, or 4, so forth. I've had clients that were a table 3, meaning 3 tables below a standard. And because of the way we design it, we're designing this for cash value, not for death benefit. So what happens in this case, the death benefit on the guy who's table 3 is not going to be as high as a guy who's preferred. But again, we're not doing this for death benefit. But if you look at the cash value from year to year, at the beginning, it's very close. As we go out 20, 30 years, there is going to be a difference, right? Don't get me wrong. But again, the focus really isn't on the death benefit. It's just on the cash value. And Cameron, I know you even had a client that even had a higher table rating.
I did. We had a very high table rating. But again, with some of the products that we use and the way that we design it, because the emphasis is not on that death benefit function to it, is we're able to get him a really good policy. And like Anthony mentioned, is when you look at it long term, is that it wasn't that big of an impact, even though he was barely approved. And so, Anthony, let me throw it back to you with this question: is that kind of what you just covered with us was if somebody has all of these options, or we have different different approval ratings, right? Preferred plus standard, and then the table ratings that we just talked about. What if someone is not insurable, so they fall off that entire spectrum? What's the first option that you tend to look at?
What we would look at is if they had convertible term.
Mm-hmm.
Now, convertible term simply means it's term insurance that is convertible, right? So, but what converting means is that you can convert that or change it from term into whole life without going through underwriting, meaning your insurability or your rating is locked in with the term policy. So you convert that, whatever that rating is, you convert it to a whole life, you're going to get that rating. And no matter what your current health is. So the first thing we're going to do is try to get convertible term.
And is there an emphasis on what company that we would like to have that convertible term with?
What I would say, if they're maybe an existing client, a lot of times we do recommend convertible term when they get their IBC policy. And in part, the first reason is we still have an obligation to protect the family.
Yeah.
So I do want to make sure that the family's protected, and term insurance can be a cost-effective way to manage that risk for a certain period of time. Okay. But sometimes people may have a convertible term that they had before. Ideally, we'd want to use it with a mutual insurance company. Mm-hmm. And the reason being is because they're going to look out for you. They're not looking out for the stockholders. They're owned mutually by the policyholders. So we're going to get dividends, and we also think that they're the best stewards of money when it comes to life insurance. So the first option would be convertible term with a mutual insurance company.
Yep, totally agree. And kind of just to add there is maybe some of the time that I don't want to say mistakes, but like Anthony just mentioned, is a lot of times if somebody comes, they're uninsurable, and they've got a policy, the death benefit amounts aren't that much. If they do have something, right? So if they've got 50, 100,000, that type of death benefit really doesn't work in with kind of what we're doing on the banking side of it. And then also depending on the company, it's not a good fit either. So if you guys have some of those, and you're thinking maybe you're on the fence about doing banking at some point in the future, call us up. We'd love to take a look at what you currently got, and then we can make a recommendation on whether it's a good company to have or if we should switch it in preparation for some sort of potential conversion over to a banking policy.
Perfect.
Yeah. One example that I would say that comes to mind when we're talking about convertible term insurance is, man, I had just had this conversation recently, is I had some clients that have been clients for a while, and Anthony knows this, but our process when somebody comes in is we get a lot of people that ask questions about banking and are just like, hey, I don't know if this is a good fit for me. And so sometimes the timing is not right for them to get started with the banking policy. And so there's many, many times where we'll just tell somebody, hey, you know what? I think the best option for you right now is just to get a term policy in preparation for that conversion. And that gives you some time to do more research and get familiar with the strategy moving forward. And so that was the conversation I had with this couple several years ago. And it's probably been, I would guess, 4 or 5 years ago. And just in the last couple months, they had reached back out to me and they said, hey, we've got this convertible term policy. We'd like to look at our options for conversion. And when I reached back out to them, they actually told me that the wife has $1 million convertible term policy, but that she was diagnosed with cancer about 2 years ago. And so she went through that whole process and has since gotten better, and she's on the mend, and she's doing great, actually. And so now what they want to look at is converting that policy. We went and looked at it, and it was a preferred plus rating. And so what that means is that she can convert that term policy over using that pre-approval at preferred plus for her new banking policy. Yeah, so that's a great option, right? So that's one of the many reasons why we recommend term insurance.
Now, I'm going to kind of tell a similar example, but unfortunately, the opposite outcome.
Okay.
I had a client came in and we had talked about banking, and just the timing was not right. Similar to like what you just said, Cameron. So like, okay, that's okay. We got your approval. Let's just get term insurance. And then when you're ready, we can convert it to a banking policy. That was probably 4 years ago. And then he recently, he's been listening to podcasts and watch us on YouTube. He's like, okay, Anthony, I think I'm ready. I'm starting to get it. And so we came in and we started talking about it. And he's like, you know what? I think I'm uninsurable. And I'm like, again, the first thing that comes to my mind is like, well, you're probably over-exaggerating. But unfortunately, in this case, he wasn't. He was just diagnosed with colon cancer, a very small grade. But he may not never be he may be uninsurable now, but as I said before, typically after 5 years of the diagnosis or treatment, you can get a policy. And I'm like, okay, that's all right if you can't get a new policy. But I remember when we first met 4 or 5 years ago, we got some convertible term. So no problem. Let's just convert that. And he's like, about that, I canceled it.
Ooh.
And so, and in part, he didn't see the value, right? Because again, it was term insurance, and he didn't think he really didn't need the death benefit. He didn't think,
yeah.
So he canceled it, which brings a good question, Cameron. What are some of the reasons why people don't get convertible term?
The reasons that they don't get it is really probably price. Is that monthly? There is a monthly cost that comes along with it. And what you had said just a minute ago is they don't see the value in it, right? And so if someone doesn't see the value in either paying the premium for the term coverage or that death benefit coverage, then they're not going to keep it. They're not going to have it. So,
yeah, it's tough. I mean, I will tell you, for me, I'm a little different because I've gotten a lot of policies, and I started getting tired of getting examined. I mean, there was one examiner I knew were on the first name basis, but for one, I didn't like getting examined, but also, and this is going to surprise you, Cameron, maybe some of the audience, I'm not as healthy now as I was when I first started IBC. My first IBC policy was Preferred Plus, and so was my second one. And then I got one, they said that I was standard. I was like, what? Even though I knew it didn't make a difference in the cash value, but my ego was bruised.
You have an ego?
Just a teeny one. just very teeny. But this was actually helpful because it pointed out that my A1C, which is like a precursor for diabetes, was going up. So what that allowed me to do is start working to bring that down. And then when I was able to get another policy at Preferred Plus, So what I did is I took as much term as they would allow. And I did that for a few reasons. Most importantly, it made sure that my family is going to be protected, but also I'm protected from being examined again. No matter what happens to my health, I locked in my insurability. So now, the next time, which I'm actually in the process right now of converting some of that term, simple one-page form and sending the premium, and it was done. So option one is ideally we want to, if you're uninsurable, see if you have some convertible term. But if that's not an option, we need to look outside of you and try to get a policy on somebody else. Because remember, typically the reason why we're doing this isn't death benefit, it's cash value. So that cash value is going to be the same on whoever is insured. But in order for you to get a policy on somebody else, you have to have what's called insurable
interest.
You have to have what's called insurable interest. So, Cam, you want to share what that is?
Absolutely. Insurable interest exists when the loss of or damage to a person would cause the person to suffer a financial or other kind of loss. And so when you're doing that, our option number 2, when you're looking to buy a policy, is going to be on a family member. And typically there's 4 people that we're going to look at. First one is going to be the spouse. Second one is going to be the kids. Third one is going to be the parents, and then the fourth one could potentially be siblings. And so I was going to share kind of a story here about a client buying a policy on actually his sister. So this guy was also uninsurable. Mm-hmm. And so what we did is we were looking at options to buy policies and who we could buy it on. And we had a really good discussion about kind of family dynamics. And the scenario that this gentleman was faced with was that his parents were not very well off, and so him and his sister had been having conversations for years about how they were going to take care of them if there were any sort of health ailments or anything that came up. And so what I had brought up to him, or what we suggested, was, man, if his sister is no longer there is a financial burden that falls squarely and wholly on his shoulders to be able to take care of his parents. And so what we ended up doing was we ended up buying a policy on his sister to protect him from losing that kind of shared cost of his parents' medical cost potentially.
And another way that we've done, again, when somebody's uninsurable, we have the person put it on their kids, mm-hmm. even if they are adult children. One example, I think the client was about 77, and it wasn't because she was old, but she was uninsurable. She had some health issues. Okay, so and then she ended up selling her house. Okay, but then now she had all this cash and wanted to make sure that a couple things. For one, it's going to be safe. We're not going to lose money. Also, it's going to be protected from creditors, and she wanted to be able to move it down to the kids. Like the kids were going to get the money anyways. So what we did in that case, we took that money and got a policy on each of the children. The mother owned it and controlled it. Okay. Well, actually, in this case, the children owned it, and the reason why we did it is because we wanted to get assets out of the mother's name. Okay. So depending on the situation, we do have that option to change the owner, but in this case, she trusted the children to make sure that if she did need the money, that she could get it.
Awesome, great story. So that would be the first place that we go. That would be option number 2. Would be looking at certain family members and the dynamic that comes into play along with that. And then the third option would be business partners. Right? Man, if you've got a business venture with someone and they're no longer there for whatever reason, there is absolutely a financial loss that will and more likely take place. And so for someone to buy a policy on a business partner is common practice. It's done very often. We do it quite a bit. And I'm doing this recently. I have a client that is uninsurable. Very successful, younger, and he's uninsurable. And so what we're doing is we're looking at taking 2 policies on 2 business partners. And so instead of insuring him, what we're going to do is we're going to put some business planning in place. And so we're going to insure the 2 business partners and create a banking policy there.
Now, in that situation, Cameron, the individual is uninsurable. But is there a place to get a policy on a business partner even though you're insurable?
Absolutely. And that's done often. It's for many certain reasons. You can do key man policies. You can do buy-sell agreements. You can fund them through life insurance. So, yeah, that's a common practice, is to buy a policy on a business associate. And
I tell you, I have a policy on Becky, and she's a very important part of the team. If something happened to her, the business is going to have a huge obstacle.
Mm-hmm.
So what that means, there's going to be a delay. We're going to need to hire somebody. There's going to be some issues, but having that cash flow coming in can provide some guidance to help hire. And also, with the loss of an employee, there typically can be a loss of revenue in the business. So this will help the business continuing to go on. So even though I am insurable, I'm looking at different risks, right? What's going to happen that's going to, if somebody passes, is it going to affect me? And hey, man, maybe I put a little policy on there to protect me in the business, but also another place to store some cash.
Absolutely. So let's review real quick, Anthony, right?
Mm-hmm.
Common practice, when someone comes to us or for whatever reason they're uninsurable, where's the first place that we're going to look?
Convertible term.
Convertible term. And if you guys have questions on if your term that you have currently right now is convertible or not, or if it's with the right company, reach out to us, schedule an appointment. We'd be happy to take a look at it and let you know. Anthony, option number 2, where's the second place we go?
Look at the family tree.
Awesome. And then number 3, where are we going to go after that?
Business partner / key employees.
Awesome. Great. So now we hope that you guys have a little better understanding that when you hear those words uninsurable, it is definitely not kind of the end of the road for banking by any means. We have several options that we can exhaust when we're looking to put something in place for you.
Now go make it a fantastic day.
Take care.